Hey, welcome back to our podcast, your go-to source for all things real estate and lifestyle in the heart of Fort Worth, Texas. I'm Jackson Christian Berry.
And I'm Jean Kristen Berry.
And together, we're here to guide you through the vibrant world of Fort Worth and surrounding suburb living.
We believe in creating a community where everyone feels at home. And that's why we're committed to bringing you honest, expert advice in a fun and friendly way. From the bustling streets of downtown to the serene suburbs, we've got the scoop on what makes each area unique.
Each week, we'll dive into the latest market trends, offer tips for both buyers and sellers, and share insider knowledge to help you make informed decisions. So whether you're a first-time home buyer, a seasoned investor, or just curious about some of the Fort Worth charming neighborhoods, you're in the right place. Let's jump into today's episode. Well, hey everybody, and welcome back to Welcome Home Fort Worth. We're so excited that you've joined us yet again for another market update. Yes, it is the best day of the freaking month. We love this day so much.
You really like it.
It is the most exciting thing in real estate because this is what actually just happened in the month that we just left. So This is your market update for the month of April. A lot of really fun stuff. To be honest with you, it is looking like spring has finally come.
Spring is here.
Yeah, spring has come. Obviously, you know, the temperatures are changing and things like that, but really the spring market has kicked in because we saw a pretty substantial jump in new listings that we haven't seen this year. And we saw that nationally across the board. And so that's really exciting for us. So just real quick, couple things to talk through. This market update is for predominantly Tarrant and Johnson counties, with just a little bit of Ellis and a little bit of Parker thrown in as well. Heads up on that. And then besides that, always want to make sure you know real estate is hyper local, y'all, especially right now with what's going on. So if you have questions about what's happening in your neighborhood, these will be more specific than a local news network would get you for sure, because they're with these areas. But we can still go deeper and we can still deep dive into your specific area. So heads up on that. Let's jump in.
Yeah, hyper local, right?
Hyper local, we got to do it.
Okay.
All right. Well, so like I mentioned, we had a bump in new listings. So we had new listings increased 10% since last month. So since the month of March to April, we've had a 10% jump in new listings, which is awesome.
That's a big jump.
That's a big jump. And we've had a 15% year over year. So this is exciting because a lot of people are saying last year was the bottom of our inventory crisis. So some people are projecting and predicting that this inventory crisis we've been having for so long, at least we've hit the bottom of it in 2023. So again, only time will tell if that actually ends up being the case, but hopefully it is, because that means that we're on track to a little more of a normal real estate buying and selling environment. So very, very fun stuff. Moving on, the number of active listings. Okay, so this is how many listings are on the market today. This is kind of our supply, right? It is up 15% month over month.
Wow.
Which means that homes probably sat a little bit longer. We did see that increase in new listings, but homes sat just a touch longer than they have. And you're up 45%, big jump,
That's
year
huge.
over year.
Oh, compared to last year, to 2023.
Listings.
Okay.
Isn't that crazy?
Okay.
Isn't that crazy?
Here we go.
Yeah, that's what I'm saying. So it's here, y'all. So we have kicked in. We're at the beginning of it. We'll see bigger increases as we get closer to summer. We know that real estate is hyper. Real estate's just seasonal. The reality of it is that we have a buying and selling season where the most buyers and sellers get into the market, and it's traditionally from late March to kind of mid-September is kind of when it levels off. And so this year is an election year for us. It may level off a little earlier. So we'll see what that kind of brings for us. But yeah, I mean, there's been movement.
That's huge. That's a humongous change. That's as big a change as it was from 20 to 21, when things went crazy.
Yeah, it's a big deal. So really exciting stuff, because again, this just means that the craziness, while it was fun for sellers, if you were a seller who also had to buy a new home, it wasn't fun for you. Right. It was a scary environment because things were just moving so fast and the buying environment was so hard. So this is getting us closer to more of that traditional, we're headed that way. We're not there yet by any means. I think we'll get into it in a little bit, but I think we're trending between 4, 3, and 2 months of supply on the market. Okay. We were 2 most of last year, and we're 3 months this month. And so again, we're not 6 months is really your kind of average real estate market of months of supply. So it's still a seller's market, and we'll get into those numbers here in just a second. But keep that in mind. It's still kind of a seller's market, but we're trending more towards a normal market, and that's it. And that's important for our economy. First off, it's important for our economy, but it's also important just for if you're a homeowner or you're a home buyer. It's going to mean that you have a better chance of actually continuing to be a home buyer in a new home that you want, or continuing to appreciate with your home values. So
yeah, and keep in mind those are averages. So if your particular neighborhood is one of those that's kind of, there's hardly ever a new listing that comes live.
Sure.
Or people want your neighborhood really, really bad, and they're just after it, then that may be a little different.
Exactly.
Again, hyper local, but this is cool.
This is exciting.
This is really exciting because this is going to put a little more of an even playing field for everybody.
Yeah. Again, we're hoping that 2023 was the bottom, and we can say as real estate professionals in our industry, we saw that.
Yeah.
In our industry, I mean, we had people all across the industry saying this is a tough year for real estate professionals, just because everything slowed down so much. We went from, I think it was like something crazy like 9 million transactions in 2019 to like 4.5 million. In fact, less than 4, I think, is what it got last year. So you had like more than half of the transactions that were happening in 2019. Again, the kind of our most recent normal year was 2019, right? 2020, 2021. Those are outliers. We don't really track their data because it was so affected by external things, right? So really exciting stuff, right?
Yes,
yeah.
it is.
Isn't that crazy?
It is.
So number of sales. This is interesting because this kind of goes against what you would think here. Number of sales is down.
Okay.
And number of sales is down 8% month over month and down 8% year over year.
Oh, over year.
So
wow.
This is slow. And we've actually seen this nationally speaking. The amount of purchase applications year over year has dropped 25%. And purchase applications for mortgages is what that refers to. And so that means the amount of people who have applied for a mortgage this year dropped 25%, right? Which means last year there was 4 buyers in the market. This year's there's 3. 3 out of 4. You had 4 out of 10, I guess you'd say. This year you got 3 out of 10, right? So all that to say that wasn't the right way to say that. Excuse me. Hold on. Here's the deal. That wasn't right. I just did the math in my head. I was like, that doesn't add up.
3 out of 10, 4 out of 10.
That doesn't matter.
Okay.
The point is, there's one less buyer this year than there was last year, statistically speaking, across the board. And so we've seen a big drop in demand, but we've seen a big increase in supply.
Inventory,
okay?
yeah.
So this means there is a slight imbalance that's just happened. There's a slight shifting into the buyer's favor because there's less buyers than there were last year. There's more supply than there was this year. So fun little things that are happening.
Which I would imagine you're going to tell us in a minute has had some effect on some other important data.
I mean, not as much as you might expect.
Really?
Truly. Not as much as you might expect. Most of the big stories we have today are what we've talked through so far. We'll get into some things, but as far as, I mean, your purchase application, your home value, the average sales price increased by like $30K. And so we'll get into that in a little bit. So in fact, we have it right here. Excuse me, that's my next point. Real quick, while we're on number of sales, again, there was 1,937 sales reported for the month of April. Fun fact: the amount of those that offered seller contributions, so seller concessions, the seller gave money towards the buyer in that. It's about 50% of all the sales.
Okay.
So, and that's actually down from 77% last month. So,
which is reflected in when you have that much inventory and not as much demand.
Exactly.
Buyers get a little more what they want.
Yes. So just interesting, right? Just very, the data is showing us trends, and we feel these trends, Gina and I do, as real estate professionals, because we feel it in the market. When we put our listings on the market, you feel this doesn't feel exactly like the last listing I just put on the market, maybe the month prior, and vice versa with our buyers. All of a sudden, it's like, I feel like I have a lot more negotiating power than I did last month. And that sounds so weird to say that, but there really is that kind of feeling when you're in this. You're like, you're kind of desperate, and that's not been the case in a while.
Right.
So as a seller or buyer, either way. So
well, and we're seeing buyers take their time to make decisions more.
Yes.
They're not feeling as driven or as panicky.
Days on market is just a little higher.
Yeah.
A little higher than it usually is. Things are sitting just a little longer than they used to.
Yeah.
So even though days on market actually averages down, but we're feeling that as kind of a norm across what's happening. So, all right. So getting into average close price. Again, this is a very fun statistic to report this month. In the month of March, the average sold price was $416,953. Okay. That's now up in the month of April to $451,902.
Oh, that's a big jump.
And so that's a big jump.
Yeah.
That's a very big jump for us, which is very exciting.
Yeah.
Just means that more our price point rose basically last month, which is awesome. Which, I mean, you can make a lot of tie-ins to that. You can tell a lot of stories with that. You could say that that's traditionally speaking, we know that it is just a little more of boomers who are buying homes right now more than millennials, just slightly.
So the type of home may be
playing into that. The person out of those maybe out of those, since there's 3 buyers versus 4 buyers last year, right? Out of those 3 buyers, maybe a majority of them are more boomer. And so they're maybe looking for downsized properties but downsized properties with amenities, which usually means your price point's gonna be a little higher than just your typical, first-time home buyer property.
We've had a lot of our clients that have come through this year that are looking for lifestyle changes.
Big time.
So they're looking for different amenities, by the lake, by the woods.
And we love, we so love working with families. It's just so fun to help families relocate and kind of make those changes in their life. It's fun to walk with folks through that. And so it's been fun to watch people moving either for school systems or moving for amenities that their kids would have and involvement in the community kind of stuff. So it's a lot of fun. Just so you know, absorption rate, which is kind of the metric that you make the months of supply number off of. I like the absorption rate just because it's better with the metrics that I track, just so you know. But our absorption rate this month was 0.31. It's down from 0.39 last month. So again, we saw a tick towards it being a buyer-friendly market. You saw that slight decrease towards the seller side. To give you context again about this, we talk about this every single month. 20%, so 0.2, right, or more is a seller's market, and 0.15 or less is buyer's market. And so we're at 0.31 this month. So still a seller side, but again, we're really close to 20. And so it's not like we're, it's not a crazy buyer's market. It's not a crazy seller's market.
Properties are not sitting for, 180 days, 150 days. It's not like that kind of a market. And we've had those markets in the past, but it's not like that. It's more 30 days to 60 days. It's what we're seeing across the board. I saw it a lot in the last month with our listings that maybe they'd be on the market for 2 weeks and they might not even get a lot of showings. But then all of a sudden, it's like they were exposed long enough to enough buyers. Then all of a sudden we had a kind of a flood, and we'd get maybe 1 or even 2 offers.
And on that point, I think is a great thing to bring up. I think a lot of weather is playing more of a factor than it ever has in the last 3 years, for sure. Bad rainy weekends that we've had. We've had multiple and through much of April. Those are, I think, keeping people home from showings, and we're seeing that affect our things. Holidays are the same kind of thing. We're seeing a bigger effect on the amount of people coming through homes because of these things
because of the watered down demand a little bit.
Just a little bit, So these things hit harder because there's less people. There's less people in general buying homes, and then more of them are affected by this, weather change or event. So I think that's interesting. That's a good point.
Yeah, and they can take their time.
I think it's also good to note that when it comes to seller contributions, we see a range from $4, which is hilarious. First off. I want to know the story there.
There has to be a good
I want to know
story.
who was you have to give me $4. I want to know what that was for. Was it like a candy bar at 7-Eleven? I don't even know. I just want to know what the story was there. It's fascinating. Up to $79,000, but the average was about $7,323. And so just to give you some context on those seller contributions we mentioned a minute ago, that's what that means. And so I think that's indicative of if this was really a true seller's market, you'd see a lot less of that. First off, it wouldn't be 50%. It'd probably be a lot less than that because they wouldn't need to. And if it was a real buyer's market, you'd see higher numbers. You'd see more seller contributions, and you'd see probably it wouldn't be an average of 7,000. It would be an average of 10, 12 or whatever. So
for the buy down.
Depending on the loan. Obviously, just so you know, if you're a buyer, there is a cap on the amount of seller concessions you can ask for from a seller depending on your loan that you do. So it's just a fun fact to know. The biggest story of April, though, I think, is probably interest rates. Maybe not the biggest story. It's up there in one of the stories we're covering today as we do this. Interest rates increased pretty dramatically. They did. There was I think we started the month at 6.9, and we are now at 7.43 today. And that is up. Let's see. That is up 0.5% basically. Since last month. That's up 0.84% since last year at this time. So it's just up. Interest rates are higher right now. I think just to give you some context on that, what I noticed was that the market really, the Fed shared some statements. I can't remember who they were in front of, the body, Fed Chairman Jerome Powell. He shared some statements that I thought were really interesting because the market obviously just reacted, and which is what caused these interest rates to go up. The market reacted by saying, you know what, dude? You told us we're going to get some price cuts this year, we don't believe you anymore.
Yeah.
You saw the market just go,
Yeah.
okay, you're not doing what I thought you were doing.
you're playing with us.
You're not doing, and he never said it was like a for sure thing. So just to give him some credit there. But like the market priced in cuts, and these cuts have not happened at the timelines they were expecting this year. And so this was the first time I kind of saw the market go, hey man, like we're gonna go back and do our own thing because this is ridiculous. And then you saw our interest rates increase because of that.
Right.
So I think there's a lot of part of there. Obviously, there's so many things happening in Ukraine and all the geopolitical things at play right now. I think that's having an effect on it as well.
Right.
I think the biggest thing really was though that the people are now thinking that they're not going to get the price cuts that they thought they were, or rate cuts, excuse me, that they thought
that they're working on.
Yeah.
I have seen with a lot of new construction that they are, because rates are still kind of volatile, that they are letting people go ahead and lock them in.
Yeah.
And then they're allowing them for no charge.
Yes.
In about 45, 60 days to relock, have the
Yeah,
ability to
totally.
relock. Because it is kind of fluctuating right now.
Yeah,
so-
and it's dramatically. Like
Yeah.
we're talking like 0.5% up in a month.
Yeah.
First off,
That's a lot.
this is a lot. Tell me, you give me some context because you've been doing this thing longer than I have. Was that typical? Did you see rates increase this much between month to month?
Yeah, it's usually a slower climb if
Yeah.
it's going
Yeah.
to climb.
Yeah.
That's a big jump. I think that is a reflection of the stock market, what
Yeah.
the stock market's thinking.
Yeah.
Hey everyone, real quick before we get back to the show, if you're on Facebook, Instagram, or YouTube, we'd love to connect with you. We post a lot of content like this in case you miss an episode, along with more Fort Worth and surrounding suburb local insights and finds. You can find our team at the Christenberry Group on all social platforms, or you can connect with Jackson and I personally on our Facebook and our Instagram accounts. Just be prepared for lots of pictures of my grandson on either account. Now back to the show.
Yeah, so I think that's just good to know. And rate locks are a great thing. If you can find a lender that does rate locks, that has an effective use, and that's
Right.
probably it's probably a very needed thing right now because rates are fluctuating so much. So just keep. I mean, great hack to figure out.
Good hack.
When it comes to as we get into interest rates, we're kind of beginning to have the conversation. We always start with supply. Our market, our industry is dictated by supply and demand. That's what we deal with. So we talked about supply kind of in new listings, active listings, right? Now we're talking more demand with interest rates and what's affecting people wanting to buy homes. As we do that, we always also check the amount, how is it cheaper to rent right now or is it cheaper to buy right now? And so at our average price point from last month, you're looking at a payment of around $2,923.84, okay? And just to give you some context, the average rental rate right now is $25.66 in our area. And so it's still a little cheaper to rent. We're talking $400 away, a little shy of that, $350 kind of thing. So it's not as much as we've seen it so far. And I think that's a good indication of, well, we have a whole episode we did on this. I won't go into this today because I think it's really important. I think it's February's market update. If you go back and listen to that one, I really recommend it because we go into some details about like, that's great that you have saved that $400, but are you actually going to invest that like you are when you're owning real estate? So
The other issue is when you're owning real estate, you're investing $2,900 a month.
Yeah, exactly. Yeah.
In your own
well,
pocket.
I mean,
Or at least a good portion.
you're a good portion.
Yeah.
I made this.
Your principal.
I made this mistake because when I think about, I realized I've just had this revelation like the last 2 weeks for myself. I've thought that you're like, oh yeah, I'm spending $2,900, towards my home, but it's like really you got to check that principal. But I mean, with what I had estimated, let's see, 2,510 is principal and interest. That's probably going to be mostly interest. But it's not like you're doing $300, $400 towards principal, which is great. So
Right.
it's something to know. So, all right, as I mentioned, purchase application data. Okay, it is kind of steady. It's dropped obviously a little bit since a while before, but it's steady in that it's been like since March 27th. It was the purchase application index rate is what they call this, was 145.7. And today in May, it's 144.2 basically. So we've not seen like dramatic, increases in the last month, which is nice throughout the month. I think you saw it get down to 138.7 on April 10th, and it popped back up to 144 It's been as high as 146 throughout this month. So you saw that's not crazy ranges. That's nothing that's dramatic.
Minor.
The biggest dramatic thing we saw it was in March. There was a big dip in March that we saw, and then looks like November of 2023 last year was probably our second biggest drop, which makes sense because that's when interest rates started to kind of do their thing. So that's fun. I feel like I hear more people talk about this than ever. The thing that I think is also affecting people's desire to buy right now is inflation.
Yeah.
The inflation rate, as we know it today, in February it was 3.15. And March 31st, it was quoted at 3.48. We've not seen April's numbers yet, but inflation's up, and the Fed knows this. The Fed is restrictive right now because they're not seeing as fast a decline as well. The good news is, if you look back to March 31st of last year, year over year, basically, right, 4.98 was the rate. So I mean, inflation's coming down, and that's what the Fed has been after with all these high interest rates, right? So we're tracking and trending the right way. The Fed just isn't seeing exactly what they want to see, and they are not. I mean, and this is a big conversation. Everybody wants to see lower rates. But you got to keep in mind, when you're advocating for lower rates, you're also advocating for the job market to take a big hit, because those things are going to tie in. If the Fed sees the job market, declining, that's when you'll get lower rates. At least in the meantime, unless we do kind of a soft landing, which is what they're hoping for. We'll see if it happens. We hope it does. But so the point is, like, these interest rates are a good thing because they are slowing inflation. Now, inflation's still a thing.
It is.
Groceries are expensive right now.
Groceries, gas.
All of it's expensive.
Water bills.
So I think that's affecting little day-to-day life is more expensive than it has been in a while.
Yes, it is.
So.
Yes, it is. And I think we're seeing some of that. And I think that's being reflected a little bit in the buyer demand.
Oh, for sure.
People are really, really like counting their pennies more. They're really, really paying attention to what's my utilities going to cost. And they're just putting a lot more analysis into their buying decision.
Which is more stressful. There's more stress on the wallet than there has been.
Yeah.
Even if you're not living paycheck to paycheck, more of your paycheck is going to just day-to-day living. And that's just more stress. So that's no fun for anybody.
It's something to manage.
Yes. Yeah.
Something to manage. So I think all that together is probably, the Feds they're very concerned that spending is going to just take off again if they bring
which is what happened in
down.
the 70s.
Yeah.
And that's where most of these guys, in fact, they were the problem, most likely. They were the reason inflation took off, because they would have been at the age, I'm guessing, just based on what I'm assuming their ages are, they would have been at the age where that would have really been kind of, they were part of the pack that really sent that flying, right? And so this is they're really concerned about it. It's an okay thing.
It serves a purpose.
It serves a purpose. They can be too conservative, where it will cause some problems for our economy. And they can be too, I guess you'd just say progressive or liberal, right? Like on the other side of that, where they will also cause, like, inflation will take off, right? And so they're staying on top of it. They're moving slow. One of my favorite economists calls them old and slow. They just are old and slow. They move so slowly. And that's a good thing and a bad thing. It puts more pressure on inflation, which is good. But again, it's. So
it'll keep the pressure on the real estate market for a little bit of time.
Yes. And the biggest shift, like I mentioned, is that people have not gotten the cuts they were expecting. People had hoped to receive a rate cut by now at this time in January when they were talking. And it's not happened. And it's really not looking like it's going to happen. It probably will be like Q4 of this year, I would guess, before we really see one, is my prediction. But, who knows? I don't think we're going to see 5s this year. Some people were talking about that.
Right. We thought that at the beginning of the year.
Some people were saying that. I don't know. If I had to guess, I'd say if we're lucky, 6.7 probably end of the year is what I would guess. But that's just my thoughts. And it'll slowly kind of just keep doing its thing. It'll be a slow decline. Right. Unless we hit a recession. If we really hit a true recession, traditionally what's going to happen is the Fed's going to cut the rates to help out with that. But then we have a whole other separate issue. So it's all kind of a smorgasbord of things.
Right.
Getting back to so we've talked supply, we talked demand. Now, what I like to also talk about is what it would look like if you got into the market today as a seller or buyer, if you jumped into this, right? And so average days on market today is sitting at 55 days on market. That's down from 61 days last month. And year over year, it's up. It's what is that? 9 days, basically.
Yeah, 9 days.
So things are sitting just a little bit longer than they were last year. But they're down since March. And so
Yeah,
Spring demand.
Yeah.
Spring demand's here.
It's here.
That's what that is. We see like a trend. You see it go up in the winter months, and you see it go down, days on market at least. You see it go down through the spring and summer.
Yeah, the challenging thing has been with this statistic is really just helping the sellers to be okay.
Yeah.
Just helping sellers not to panic.
Yeah.
Because they were accustomed to hearing all the news about, selling the first weekend and all that. And if they don't get a lot of activity in their showings or in their open houses, then that's the kind of the dynamic that we've had to really just manage and help people not panic. Because this is just a different market. It's just a little different place.
Yeah.
Everything is still, properties are going to sell.
Yeah.
We just have to make sure we got them priced well, and we have a little bit of patience to let the buyers kind of circle through and see them.
Well, and just give people context too. Like, let's say back in 2012, 2013, what was that like for a seller?
It was not unusual for us to have properties on the market for 8 to 10 months.
Yeah. Okay. And were the sellers stressed during that time?
It was a stressful time.
Okay.
Yeah, they knew it would at least. Most sellers were accustomed to the idea of it taking about 4 to 6 months.
Okay. So they would sit 4 or 6 months, not do a price change. They'd just kind of be there.
We start looking at price changes around 90 days.
Okay.
And, in this market, I think you still want to start considering price changes around 30 days.
Yeah, agreed. No, yeah.
So we're not in that kind of market.
Yeah, based on activity, you're seeing.
Yeah, based on activity. And that's what we were basing it on then, too. But then you'd only get like maybe 1 showing a week on a property, and that was okay.
And it was normal.
As long as you had at least a showing to 2 a week, then you were still getting the activity.
Yeah.
People were still looking at it, and you wasn't ready. It wasn't time yet.
Yeah.
But that was that market. Every market is just so different.
Of course. Yeah,
They're
no,
so
but I think that it's nice to hear that there exists a scenario where you don't have to be stressed if you didn't get showings your first weekend.
Yeah.
Because we don't always see that. But, I mean, the conversation has to be, it's just, there's so many things that go into it. But you've got to be tracking things. Somebody like a real estate professional or you, working your butt off to track this stuff, you've got to be tracking your activity. How is it performing on Zillow? How is it performing on Realtor.com? Are we getting saves or just views? How is it? Are we getting showings? What is the showing feedback?
And what's happening to the other properties that are
100%,
your competition?
yes.
Did somebody else get picked this week?
Yes, it's so sad to watch sometimes is when somebody we watch, a property go under here, a property go under there. That's our competition. And almost always that's going to be price unless they're offering concessions or stuff like that. So, it's very interesting to watch the ways in which the market plays out sometimes.
It is.
But again, just keep that in mind.
Somebody needs to be monitoring and really watching that and giving you lots of good feedback.
And I love the question right now. I'm working with some clients that are so fun. They just ask me the question all the time, is this normal?
Yeah.
Is this normal?
Yeah.
And I love that question because they're just it's such a great question to be asked as a real estate professional because y'all do this traditionally, statistically speaking, you do this every 7 to 13 years. The average home buyer, home seller makes a move every 7 to 13 years, right?
It's really gone up.
It has gone up. Isn't that crazy?
It used to be like 5 to 7.
Isn't that crazy?
Yeah.
So 7 to 13 years, people are staying in their homes longer. That's crazy first off. Here's the deal, we're in this every day, and real estate professionals should be, not all of them are. I think this is such a sad statistic for our industry. It's like 79, 83%, something like that, of real estate agents do less than 1 transaction a year.
Wow.
Have you heard this?
I knew it was pretty high.
It's wild how high that number is.
Yeah.
So that's a crazy thing about our industry. That's just nuts. Anyways, so they should be in the industry often and in the market playing and doing more than 1 transaction if possible.
If possible.
If possible, it's gonna so that they're aware of what's kind of usual for right now and they're not playing ball in the previous market. But that's a tangent and we apologize. But I think it's important to know you've got to track activity right now. Tracking activity, you can say here's what we're gonna price it at. But we've got to track the activity of the home sale because if we're not tracking the activity, we're not really paying attention to what the market's telling us about that price.
Right.
We can market everything. Like if you have a home that's worth just to exaggerate the point, if you have a home that would sell traditionally for $400,000, but you've priced it at $1 million, no amount of marketing that we can do, no amount of anything is going to get more people to spend $1 million on that home.
It's just more eyes seeing it overpriced.
Exactly.
Yeah.
It just is.
Yeah.
And so there's just the price is such a huge part of that. So as we also think about days on market, we'll also look at what's the close price to original price ratio. Because what this is going to help you know as a buyer especially is what's this home price? What's this home going to sell for? Can I get it below list price, right? And how far can I go, right?
How much negotiation?
98.3% in the month of April was the average. So 2% off list and not unheard of, right?
Yeah.
But not more than that. And we've been The lowest we've been in the last year was 96.9 in November. I'm sorry, 96.5, excuse me, in January. That's our lowest that we've ever been.
In
so
January.
4.5% off, or 3.5, excuse me, percent off. So, it's not crazy. That number is up 0.1% from March, and we're down 0.7%, so it's not like crazy changes.
There's actually a number that I'd like to look at for our industry, because what that tends to tell me is how well our realtors have adjusted to the market.
Well,
and they're starting to price things the way they need to be.
Yeah, I don't know. So the software that we have access to view homes, the MLS, it's called Netris. Netris has a little graphic when you first log into it that'll show you the amount of price decreases that are happening and the amount of expired listings and ones that are canceled and stuff. And that's usually also indicators of like, how is our industry doing at helping sellers to actually sell their home? Yeah. Are we having to still do price decreases left and right? And part of that, are we having the right conversations with our clients to just be upfront with them, to be very open and honest and kind, to say, hey, this is what the market's telling me you should price this at, Yeah. And if you've got a seller saying, hey, I really want to price it way up here, it's like, okay, Mr. Seller, or Mr. and Mr. Seller, whatever, we can do that. Here's the deal. I'm going to have a conversation with you in a week within those first 7 days if we are seeing low activity at this higher price point, because it's just, this is the market you don't want to play too much with that. You don't want to do that kind of thing.
Well, and the highest visibility you have with a listing is the first 30 days.
Yeah, totally. Yeah, you want to come on strong. You want to make waves. You want to talk about it. You want to have people go, oh my gosh, you see they selling their house? Like what? Like
you get to be old news.
You want all that. Yeah, totally. So that's just FYI, y'all. Those are seller conversations. As we look ahead, so we track kind of the way that we can predict what's coming is by looking at pendings. In the month of April, we currently have 2,257 pending. That's up from 2,080 in the month of March. Yeah. And so we have about 200 more pendings going on right now. So we see that there is an increase in the amount of homes going under contract as we lead into the month of May. So, not a bad thing.
Yeah, that's good.
But again, seasonal. Like it is. We know that. Yeah. We expect that to happen. It would be weird if that didn't happen.
Yeah.
Right?
We'd be in a recession.
Yes, exactly. It'd be very strange.
It would be a very strong recession.
It'd be very strange. So, and then as we always like to end with our podcast with the best news, the reason we are thankful to be in real estate, and the reason why real estate is fun to talk about and fun to help people buy and sell is because if you look at 10 years ago, 2014, the average close price in these areas was $212,512. Okay, and today that sits around $432,803.
There you go.
So that's just real estate's a good asset if you hold it long term. You hold it long term. That's the key. So
absolutely.
The other thing to note about home appreciation that we've had in this area, appreciation outside of COVID years ranges from 3 to 9%, and averages around 6%. So good to know that we have pretty decent appreciation here.
Yeah, and a lot of times you get that in the stock market.
Sure.
With your 401ks and your IRAs, and
sure,
that's a good average investment.
Yeah, it is. But this one's fun because it's got a dual purpose. Real estate's fun because you get to live in it. Yeah. Like it's going to serve you and your family. It's going to support you and your family. It's going to house you and your family.
Absolutely.
While it's also making you money in the long term. So pretty cool stuff. Anything left for the people before we sign off?
No, love the stats, love the statistics. Just it's good to hear that we've got more sales happening and buyers are still in the game.
Yeah, for sure. Yeah, it's a lot of good stuff. So if you have any questions about what's going on in real estate, let us know. Obviously, we're always here to answer your questions. Again, it's hyper local, so there's probably some questions you can ask us that we can tell you what's happening in your area. We always love doing that. We always love helping people do that. The other thing I wanted to make mention of, if you are somebody who's watching this and you have gotten your tax bill, and you feel like it's just outrageous or something, and you need help arguing that, let us know. We're glad to help you with that as well. We've gotten some people asking about that just here in the last couple of days. And so if you're somebody who could use help like that, let us know. We've got to do that.
Yep. We'd be happy to get you some numbers. And if you decide you want to hire somebody to do that for you officially, we got some names for you too.
Yeah, for sure. We can help you no matter what. So, all right, y'all. Thank you for this week. And this is your April market update. We'll catch you back next week for probably tips or tricks or interview or one of the two. So we'll see you then.
Thanks.
Hey, thank you so much for watching the podcast today. If this has been valuable for you at all, we sure could use your help getting the word out to more people. If you're listening on Apple Podcasts or Spotify, go ahead and give us a follow and consider taking just maybe 2 minutes to leave us a review. Both do wonders for our show with the algorithm, and on both platforms, all you gotta do, head over to our show page. On Spotify, hit the 3 dots and select rate. And on Apple, all you gotta do is just scroll down to the show and say leave a review. So just click that. If you're seeing this on Facebook or Instagram, a like or comment puts all the good vibes out in the algorithm for us. And on YouTube, make sure you smash that like button, subscribe, and hit the notification bell so you can be notified whenever we post a new episode. Join us again next week for more Fort Worth housing news and updates. Until then, y'all have a great week.